the Indian markets are surrounded by a lot of risk right now. Because if you're looking at it, the Nifty 50 is just down by 7% from its all-time high created in December 2022. But there are a lot of new statistics, new name throwings, and new news that you should be worried about that can cause a large market fall in 2023. So here are three major risks that our markets are facing as we enter the third month of 2023. My name is Ajay. Welcome to Market Feed. Risk number one, Adani. Yes, our own Adani ji. You may have all heard about the Adani and Hindenburg saga, which saw Adani Group stocks bleeding. And if you thought the fall was done, then you're wrong, my friend. The total market cap of Adani Group stocks just one day before the Hindenburg report came out was actually at 19.13 lakh crore rupees. And by the time we are recording this video on last Friday, it is standing at 7.15 lakh crore rupees. So after hitting a peak in last year's September, these allegations came out. Hindenburg said that Adani Group is actually engaged in brazen stock manipulation and accounting fraud that has lasted through decades. And take these facts at whatever level you may, but understand that Adani Group stocks are falling as a reaction to this incident, and that is no joke. So while market cap is not a direct indicator of how a financial status of a company should be judged, you should know these facts about how any company uses the stock market to actually raise money. Because Adani tried to do a further public offering last month. And what did they try to do? They tried to sell stocks to public shareholders and raise money. That is what the stock market is for, right? You sell a percentage of your company and you raise money in return, which you can use for business expansion. But this time it failed. You may be knowing this, but what is the risk here? This means that Adani's any future expectations to raise more money from the stock markets might be in trouble by this move. So that means at least for a few years, no more new group company IPOs, no more companies going public, because that's how Adani works, right? They take a new company public, they take the money that they receive from their IPOs, they rotate it between their group companies, and they keep doing it again. And because still now the name tag of Adani was listed in any IPO, retailers would actually jump up for it. They would throw their money at it, but now all that is at risk. Why do they need to raise money, you ask? Adani Group has a total outstanding debt of nearly 3.4 lakh crores. Again, their market cap is somewhere near 7.15 lakh crores and their total outstanding debt is at 3.4 lakh crores. And if you're finding it hard to judge that number, it is 1% of the total Indian economy. Let that sink in for you. So let's leave the question aside that if Adani falls, is it a risk for the Indian markets and the Indian economy itself? Definitely it will be. Let's hope that such a case does not happen for the sake of the Indian markets and for the sake of the Indian economy itself. So yes, Adani will not be able to raise more money as expected, and the second route that they can go to is to actually raise money through more loans, right? Funnily enough, the Adani Group CFO had actually come out last day and said that foreign banks actually take credit-based decisions and Indian banks take name-based decisions. So he's actually pointing out that a lot of Indian banks are actually no longer giving loans to Adani on the fear that their stocks will get affected, that they will get trapped in this cycle as well, where the stock market actually punishes them for being attached to the Adani name at all. But there's a small problem there as well. Foreign banks have actually stopped accepting Adani Group stocks and securities as part of their pledging process. Earlier, they used to be like, okay, give me 100 shares of Adani, I'll give you the value of 80% of that as loan. But they are no longer doing it on either bonds or shares of Adani Group. And this is major trouble because reports have already suggested that Mr. Vinod Shantilal Adani, who is Gautam Adani's brother, he's actually controlling a lot of foreign investing firms that are pumping in money to Adani stocks. And how are they getting money? They're pledging Adani Group stocks and securities as collateral, getting loans for that and buying more and more Adani stocks. That was what was happening. And Adani stocks went up. And that is news that we know. So over the last 3 years, Adani Group stocks shot up. Everyone was happy. Everyone was making money. Even retailers were happy. But now there is a problem. So let's say you pledged an asset that is worth 100 rupees and you got a loan that is for 80 rupees. And now the pledged asset value actually starts falling. What happens then? So say it reduces to 80. Then maybe nothing can happen. But say the pledge asset value goes down to 50, but now the banks have given you a loan of 80 rupees and your margin or your actual asset is just worth 50 rupees. So if your value of your asset keeps on moving down, the banks will ask you for more margin, and that is called a margin call. They will ask you to either prepay those margin differences or they will ask you to put up more shares as collateral. Say if you had put one share, they'll ask you to put two more Adani shares. But if you fail to do so, then comes the actual danger, because they will sell whatever shares that you had actually put up. They will sell those shares worth 50 rupees, even if it's at a loss. They'll sell it at that and they'll make sure that they get at least a part of their capital safe. What happens to your initial share? It's gone. It's sold by the bank in the open market at a huge loss. Yes, so the issue now is that Adani Group and its promoters have kept a lot of shares as collateral and they've gotten a lot of loans, including Gautam Adani, his brother Vinod Adani, and this is not in a mere hundreds or even few hundreds of crores. This are in the 10,000s of crores. So if margin calls start coming at that level, on a personal level, not at a company level, if it starts coming at a personal level, then there is a fear that Adani might not be able to pay up, and it will actually cause a huge fall in the stock market. It can affect credit ratings. It can scare away Indian banks and foreign banks from giving more and more loans to Adani. So this is a brazen fact. If foreign banks and Indian banks actually say that they will not provide loans to Adani, and if his means via the open equity market is no longer there, then how can he raise more funds to make sure that his capital heavy businesses keep on growing? That is a big risk. And with that, let's get to the second risk, which is LIC's and SBI's exposure to Adani. SBI has a loan book exposure of 27,000 crores to Adani, and these are just public numbers. Who knows, there might be more loans, but definitely there is nothing lower. And if you're looking at the total loan book of SBI, they say it's just less than 1%, but it is a significant amount still. And there are a lot of other private sector banks and public sector banks which have huge loan book exposures to Adani. So even if at an individual bank level, this might not create a huge issue for SBI, in the general market sense, if you're looking at other PSU banks also, yes, SBI is seen as the flagship leader of the government's PSU banking space. If any other PSU bank fails, SBI will have to chip in to help. And if you're looking at the larger sense here, then the group exposure becomes more and more tough to look at. And if for any other reason that we had discussed earlier or otherwise, Adani Group actually starts defaulting on its loans, it will be massive and it will create a domino effect that can in fact affect the entire Indian economy. Okay, leave SBI aside. Maybe it's just a small exposure. But now let's talk about LIC, because LIC had an investment of more than 30,000 crores in Adani Group stocks. It owns 6% of Adani Total Gas. Yes, 6% of such a massive Adani Group company. Fun fact here, if you're looking at the promoter holding, it's 75%. If you're looking at the FII holding, it's at nearly 17%. And it's said that FIIs are actually Gautam Adani himself or his family himself buying Adani stocks to circumvent the 75% promoter rule. And then 6% comes with LIC. So what is left? Retailers are apparently holding just 1.86% of a stock. The rest is controlled by Adani Group, LIC and their families. What craziness is that? So if you're calculating LIC's total equity holdings, it is currently at somewhere around 10 lakh crore rupees and Adani Group forms 3% of that. They were in a notional profit of nearly 100% earlier, but now they are in a loss in their total holdings is what we can understand. So LIC, so two things here, India's largest domestic institutional investor holding a lot, lakhs of crores worth of retail investors' wealth. The one supposed to be protecting that is putting all that money or putting 30,000 crore rupees into a stock as troubled as Adani. So the issue is not just that LIC is at a notional loss of Adani Group stocks right now, because it's not like they can sell the stocks and get out right now. All stocks are falling. There's not much liquidity. The FIAs are not buying, retailers are not buying. So who is going to buy 30,000 crores worth of stocks right now? That is not the issue. The issue is that every time the market falls, you might be seeing something. Somebody comes up and keeps on buying shares from the market. Who are they? Domestic institutional investors. Who is the biggest domestic institutional investor? LIC, and 30,000 crores worth rupees worth of stocks is actually locked out by LIC. This is 30,000 crores which could have been used if the market was falling. LIC is usually the one who actually supports it, brings the market up, buys more and more. You see DIS buying headlines, it is LIC buying the stocks. And if LIC has a 30,000 crore hole in its pocket, that means it's 30,000 crore less rupees flowing into our other stocks. And that's the second risk. Can huge state-run players like LIC, SBI and other PSU banks create a larger threat to the economy because of their exposure to Adani Group stocks? And the third risk is NSE's growing futures and options problem. As per data from NSE, the retail participation is falling in the cash market. Less and less people trading stocks at this point. Retail participation in the market compared to the total market turnover, it has fallen by a lot in the last 12 months. And the interesting thing is that this financial year is not yet done. And the futures and options turnover in our market this year, FY 22-23, has nearly doubled. So what does this show? More and more retailers going out of the stock market and going into the futures and options market. People, those who have money, they're turning into option sellers. People, those who don't have money, they're turning into option buyers. So it's a war, right? You can decide, do option buyers make money? Do option sellers make money? Let that be a different discussion at all. But more and more players moving into the F&O market means less and less money flowing into the stock market. Retailers are already losing trust in the stock market. And what do new retailers here? Again, you and I know stock market as stock market, futures market, options market, everything else. But what do people who do not know the market, what do they hear? They hear that the market is consolidating. They hear that retail participation has gone down. They hear a lot of panic and they might stop coming in. New money might stop flowing into the stock market from retailers. So you might have seen the situation of panic in NSE right now. They want to change the market timings. They want to extend market timings. Why do you think that is? They fear that the retail participation, leave aside retail participation, entire stock market participation might fall. And you can see that in my video link here. The market is performing very crazily. There's the issue of Adani. There's the issue of NSE's panic itself. But there is a lot of political instability right now as well. If you had noticed last week, there is a large hedge fund investor or a hedge fund manager called as George Soros. He is very famous for his outspoken remarks and his famous short selling positions that took down the Bank of England and the Thailand economy itself. He had gone out and said that the Gautam Adani links with Narendra Modi, our PM, is not going to do India any good, and it can cause a huge impact in our national democracy itself. So his views are creating a lot of political instability. The opposition parties are taking it up. There is a Karnataka elections coming out in May of this year. There is a general elections, India elections, that is coming up next year. And this is definitely a big threat to the market as well. Any level of political uncertainty is definitely not liked by the stock market. And let's hope that our markets stay resilient in this tough times. So let's hope that all these issues get solved in a very smooth way. Let's hope that Adani's stock crash and the eventual fallout will not affect our economy and our entire market itself. Let's hope that LIC and SBI can help not just themselves but the entire market come out of this bearish phase with a bull rally. And let's make sure that as intelligent traders and investors, we reduce our risky allocations. It can be your risky style of trading. It can be your exposure to Adani stocks. It can be anything. Let's make sure that we limit it. So yes, these are the three major risks and the political instability that comes along with it that are threatening the Indian markets in 2023. What do you feel about the same? Do you think that the Adani issue will be solved very smoothly? Do you think that LIC and SBA can create a larger market crash? Or do you feel that nothing is going to be a problem, Ajay? This is just another day in the life of a stock market participant. Let me know your thoughts in the comments down below. This is Ajay Ajit signing off. See you in another video.